Hello guys, this is Mr. Cole. Again, I apologize for missing class today, but great job coming in, getting logged in, and getting into Google Classroom. So this video is here to try to help you guys as we do our stock market research. So we're actually going to start on this page. This is just a quick recap of some of the things that we talked yesterday. So what it's going to ask you to do, it's going to ask you to add up the total amount that this person invested and the number of shares that they bought. Now with this, the only real hard one that I think we might have some trouble with is where it says, what is the value of Whitney's fund on December 5th? In order to find that, you've got to find the number of shares that she has and multiply it by the price on December 5th. Remember that we know that stock prices change all the time, and so we have to find out on December 5th, what are all the shares she owns, how much are they valued at? So that page should be pretty straightforward, but what we're really going to work on today is going to be the stock market research, which we'll get to next. Guys, jumping forward to the researching the stocks. What you have to do, you have to find 3 companies that you're going to research and trying to determine if this is a stock that is good to be invested in or not so great to invest in. Now remember, the reason that we look these up is so that we can kind of make a prediction. All right, our goal is that whichever companies we pick, we're trying to predict that in the future their value is going to be worth more. So these are hopefully going to help us predict what's going to happen to the future value of these stocks. So with that, the one that I'm going to do is going to be Apple. Okay, so to do this, I want you to Google Yahoo Finance for me. When you open up Yahoo Finance, up in the search bar, you're going to search for whatever company you want. You have to choose 3 companies. You cannot do Apple, since I've done that one, as we wait for it to load. Okay, so you can see that today, I'm doing this on Thursday afternoon, that Apple has just closed at $175 even per share. Okay, and so we're gonna try to predict basically if Apple's gonna be a good stock to invest in or a not so good stock to invest in. So the first thing we have to do is find over the last 52 weeks what has been the highest price and the lowest price. What has been its range? So to find that, you're gonna scroll down to where it says 52-week range. Okay, we can see that in the last year, the price has gone all the way up to $180, about $5 more than it is now, but also sank all the way to $137. Now, this range is depicted right here. If you go up to your chart and click on 1 year, this chart right now is just the last day. So when it opened at 9:30 until 4 p.m., what its value happened. So it looks like it lost $3 today. But we can go look at the last year. We can see that overall through the past year, it has been performing pretty well. It has grown fairly steadily, although within the last 2 months or so, there has been quite a dip. We'll try and look at some reasons why. So you record the highest and the lowest price in the last 52 weeks. Okay, so skipping ahead now to where it says the current state of affairs. What this means is we want to find out what's happening at the company. Okay, traditionally companies that are stable, that are maybe releasing new products, that are things are going well at the company, typically are good investments, whereas places that maybe are going through a CEO change, or there's disagreements, or the company's doing poorly, maybe they have a bad product, usually that's going to drive the stock price down. So for Apple, I'm going to go and Google Apple stock news. Okay, what come up is a couple articles. So for example, if we open this one up, it says Apple's watch may not be as popular as an iPhone, but it's still way ahead of its rivals. So it looks like here that for the first time, Apple is dominating in terms of like watches and things like that due to their wearable, iWatches or Apple watches. So that would suggest kind of the kind of rule of thumb is, no bad news is good news. What we don't want to see are CEOs arguing or fights amongst the board or scandals. Those are all going to drive the price down. Okay, jumping ahead now to revenue and earnings. Now, Quick little definitions for you. A reminder that revenue is the amount of money that you bring in as a company, basically the amount of sales you have. It does not consider your costs. That is considered under earnings. Earnings are like your profit, so it's the amount of money that you earn. It's your revenue minus your costs. So let's go back to Apple. To find earnings, you're going to have to go look over here to the right. Here's a graph we'll start with revenue. I'm sorry. Here's their revenue and earnings. So you can see that Apple's revenue is in green. The question asks us, is there consistent growth in revenue or sales? Well, if we look over the past 3 years, the revenue hasn't necessarily grown, but it is absurdly high, right? And we're talking, $229 billion over the last year. So there's not necessarily growth in revenue. In fact, there's actually been a little bit of a decline, but it is consistent. It's kind of holding steady. We'd like to see revenue growth, but not always going to be able to see that. On the other hand, then you can look at their earnings. Okay, their earnings have actually been going down here in blue. So in blue, the earnings were 53 billion, 2016 45 billion, and now 48 billion. So earnings have been going down, but still, we're talking $48 billion in earnings. So it's not like it's a small amount by any means. This is still making an absolute ton of profit. They're just not necessarily going up. Okay. With that, then the question is going to ask about earnings as well. If there's a consistent growth in earnings per share, what this means is a measure of a company's profit divided by the number of shares that they have. So the idea is that this is maybe a more fair measure of a company's performance because obviously Apple is going to make more money in earnings than other companies are going to that are smaller. This, though, says, okay, we take the amount of earnings, we divide it by the number of shares, and you can see the growth over here on the right. So it looks like Apple has outperformed their estimates each of the 4 quarters here in 2017. And you can see that the earnings have been growing throughout the course of the year and have been outperforming. So that's good. We want our companies to outperform their own estimations. Alrighty guys, so the next one on here, is there a record of consistent growth in dividends paid each quarter? Now, to find this one, a little bit trickier. Yahoo Finance, at least what I'm familiar with it, doesn't necessarily have the dividend per quarter. But they do show down here if the company is paying dividends and what that expected amount is. So here are their dividend estimation. So the prediction here from Yahoo Finance is that Apple will pay $2.52 in dividends for each share that you own, if you own a share that pays off dividends. And then it looks like that's the expected date, which was, we're already past it, so that must have been the date that the dividend was paid. So that shows you that yes, a dividend was paid. I don't think we're able to go through and look at if they pay it each quarter or not, but that way you can see how much the dividend is going to make for that stock. Is the company consistently earning a profit? We already looked at that. That goes down back here to our earnings. Okay, we can see that Apple has consistently been earning very large profits. On here, can the company cover its debt? This one's pretty tricky to find and why I want you to walk through with me. So if we look at Apple's, for this we have to go to its financials. Okay, and we've got to see if the company's assets outweigh their liabilities. So if we go to the balance sheet is going to show us their assets. Now it gives us a ton of information. We're just going to use total assets and total liabilities. So here for 2017, Apple's total assets were $375 million. Their total debt that they owe to other people in liabilities is $241 million. So that means that their assets greatly outweigh their liabilities, which means, yes, they will be able to easily pay off their debt. Then we have how does the company compare with industry trends? Basically to this, we want to Google research, we want to find out similar companies. How does it compare with their competitors? How does it keep up with the trends? So First, how does a company compare with competitors? You got to go look up other companies that compete with them. So, for example, with Apple, I looked up HP. HP stocks at only $18 a share. Dell stock at $75 a share, but we can see that Apple was vastly outperforming those. Okay, so that's a really good sign. For the next one on here, how does a company compare with industry trends? Basically, what you're going to do, you're going to go and look up the information on competitors and see how does Apple keep up with the industry. Are they leading it? Are they on the front edge? Or are they kind of falling behind? So for us, when we looking, I looked up Apple News. Okay, when I look that up and it comes out here with the iPhone, or that Apple Watch is the most popular and it's way ahead of its rivals, that shows me that they are on the front edge of that. Then lastly on here, would you say the current price is in the high range or low range compared to recent trends? Well, you look at it right now. Is it high or is it low compared to previous trends? Right now, I mean, it's probably a little bit high, okay? And that's not necessarily what we want. We don't always want to buy something and the price is high. We want to buy low and sell high. Although, it has been pretty, high in the past. You never really know. So you want to see where is it at compared to how it's been performing over the last year or so. And then lastly, taking all that determination, you basically have to bet. Do you think that this company's stock is going to go up in the future, or do you think it's going to go down in the future? So if you think it's going to go up, then yeah, it's worthy of an investment. If you think it's going to go down, not so much. Okay, guys? So that's your work to do. Turn it in by the end of class, please. If you do not get it done, then it will be homework. Okay? Again, sorry for missing. Have a great weekend. Hopefully this video helped you guys. And email me if you have any questions. Thanks, guys. Have a nice day. Bye-bye.